New names in here today. I'm excited. Derek, welcome to the room. Todd, it's great to have you back. Who else is new in here? Do I have any new people? Any people on demo? People showing up saying, "What's all this next gen stuff about?" I hope so. I love it when you guys show up. This class is designed for you primarily to give you an understanding of what we do and how we do it here. But this class is helpful whether you've been with us for a day, a week, a month, 10 years. There's always something to learn. And that's probably one of my favorite things about day trading and just reading these indicators is there's always something to learn, guys. Um, the first lesson most of us learn because we trade directly into news is to check news each and every morning. And that's what we're going to do. We're going to take a look and see what's going on at forexfactory.com/calendar. Hey, good morning, Andy V. Good to see you. Hope you had a great weekend. And today is Tuesday, August 12th. And we've made it over the hump. There was high impact news at 8:30 a.m., guys. There was all the CPIs. And here's an interesting thing. Two were neutral. One was negative. And guys, it doesn't matter to me what the news is. I'm not saying, oh my gosh, CPI is going to affect my trading plan. My trading plan is based on patterns. My trading plan is based on rules, being able to follow concrete, proven, verified, validated rules that I can say win more than they lose. That's exactly what we're going to talk about this morning. Anytime you see high impact news, guys, it could affect the flow in the market. It could make it spike. It could make it jump. It could make it bump. Exhibit A, this 15-minute bar on the NASDAQ. We'll make it a little bigger. That was a news spike. When you look at it on the 1-minute bar, it went all the way from 63 up to 57. So almost 100 ticks worth of movement, $500 spike. And if you were thinking that a short trade was your path to riches in that moment, you got absolutely run over and slipped. So every morning, each and every morning, checking news, paying absolutely no attention to what the news says, but rather understanding that it could disrupt patterns. And then what we're going to do this morning, guys, is what we did yesterday. We were joking when we left the room yesterday. Hey, Jose G, good to see you, man. For you NinjaTrader users, we're going to hit you first because I've got more NinjaTrader users than TV users. If you are a TradingView user, guys, post in the room. We'll still answer questions. But I'm going to start with the cool kids on Ninja, guys. And we talk about one trade incessantly. 3 rules. That's it. Each rule, when true, for what we call a high probability trend trade. And this is a trade that typically wins up to 70 to 80% of the time. This is a trade that most importantly, guys, it's going to teach you to read your indicators. It's going to allow you to look at what's happening on your chart and understand where the market is likely to stop. You're going to understand where the market is likely to go, and you're going to understand where the market is likely to continue. And all of that is going to come from only 3 rules. So when a rule is true, it creates an advantage. So your first rule is going to be strong triggers. Second rule is termination, conditions false, nothing in the way. And then we're going to define an entry. So it's only 3 rules where each indicator on every chart agrees with the rules. And here's the great thing. It's only 3 rules on 2 charts. You will understand from your large chart, the first chart, this will be on the left side of your workspace. You'll understand the direction of the market through the background color, whether it is green up, red down. You'll understand whether or not rule number 1 is met and you have the advantage of momentum. And you'll do that in the very first bar is going to give you that information. And you'll understand whether or not you have a clear path. If there's anything in the way that could stop forward progress, that also will come to you on only 1 bar. So it is a 1 bar analysis read. And when you have momentum, rule number 1 met. And when that path is clear, rule number 2 met. Guys, you're going to go define your entry on a smaller, faster chart. This is a refinement chart. It takes that very broad stroke of a brush And you're going to use this to pinpoint precisely where the market is most likely to continue with the trend, where it's most likely to bounce. This is going to allow you to reduce risk. It's going to allow you to increase profit potential. Two charts is like two driving forces in the market. This is how I want you to think about it. There is a large crowd. This is your big chart. These are the men and women with the money and the influence. They create trends, they establish momentum, and they react at the key areas that you will see on your large chart. Your refinement chart, your small chart, your entry chart, this is like the small crowd. And these guys are fighters. These ladies are fighters. And they create what's called a retracement. And a retracement is nothing more than a small push down if the large crowd wants it to go up. Good morning, Chariot. Or it's a small push up if the large crowd wants it to go down. We rely on that small crowd fight, guys, because your rule number 3 is going to have you pinpointing exactly where they're most likely to fail. They are most likely to fail up to 70 to 80% of the time, which creates the advantage of rule number 3. So we're going to talk about 3 rules. We're going to do it on 2 charts, guys. We're going to do the Ninja Trader lessons first. But for everybody in the room, this is your path to getting to where you want to be the fastest. I don't care how smart you are. I don't care what you did in a previous life. It doesn't matter to me how much experience you have. If you really want to get the most out of the software in the shortest amount of time, participate in my class, guys. We're going to learn these rules for when it's okay to trade. It's okay to trade when the rules are met. That's the easiest way to say it, because my rules describe a pattern, and this pattern can be proven to win more than it loses. How cool is that? It's all about having an edge. You can all simulate, and you can practice, and you can post in my room, and you can ask a million questions, guys. There is not a limit on questions. There is not a limit on charts that you can post. If the classroom needs to run over an hour so we can take care of everything, I'll run over an hour. It doesn't faze me a bit. My record is 77 pictures dropped in the room from one client. Getting feedback on everything that he saw, everything that he did, and that client is off trading live and making a lot of money with it, which is kind of cool. So simulate, but post your pictures in the room, whether they are trades or whether they are questions. If they are trades, this is what I ask of you guys, and I'll drop this in the room. I want you to go back to those 3 advantages that we're about to discuss. I want you to describe how you read the momentum. I want you to describe what you felt about the path, and I want you to show me where you entered. And you could even feel free to tell me why you exited, but our focus is the entry first. If you do this, and there's a mistake in your chart read, we're going to go back and do a lesson and make sure that we can fix any mistakes in your reading. If you do this, and it is the perfect trade, and you did an awesome job following rules, guess what? Your annotations are the recipe for success. Your annotations describe the pattern that you can prove wins more than it loses, and your annotations are going to make this repeatable. So I love it when you guys say, got in here. Well, okay. Always answer the question why. Pretend like you're teaching your 5-year-old next to you. Be nice to yourself when things go wrong. But guys, the better you annotate charts, the quicker you're going to get to where you want to be. Good morning, Mike M. And then finally, keep it simple. It's so easy to complicate, right? Most of you are probably smarter than me in this room. That's okay. It's not always an advantage. All of you intelligent people love to complicate things. When I say 3 rules, I actually had someone tell me in a phone call once, Mark, 3 rules isn't enough to find success. You're going to need more charts. You're going to need more rules. Guys, the reality is you just don't. This is your core. This is your foundation. This is you laying the groundwork to see more trades. So keep it very, very simple, guys. Get good at one trade, at that high probability trend trade, because from that high probability trend trade, you will see all the other advantages. So there's the second piece to getting to where you want to be, and it is my firm belief and neurological scientists' belief that repetition creates recognition. So you have the ability to post in the room. The second piece of the puzzle, guys, is use the tracking sheet. And I'm going to drop tracking sheets for both platforms as well as plans. for both platforms in the room right now. This tracking sheet, whether it is TradingView or Nexgen, or NinjaTrader, excuse me. On the NinjaTrader worksheet, it's going to say Nexgen tracking sheet. Over 50 pictures of strong triggers, ingraining that look in your brain. And we're going to go through these, don't worry. And then if this is what it looks like when the rules are met, there's also pictures of what it looks like when your rules aren't met. That's your patience piece, guys. 90% of your day is reading indicators. 10% of your day is actively trading because the rules are met. Clear path is the second rule. There's pictures. Termination conditions happen to be the most broken rule among new traders. So termination conditions has a huge lineup of what it looks like to reach an area that could stop the market. And then finally, entries. The second page is the client trades. This is where I've stolen pictures from Nexgen users for the last years. Everybody's like, does it work? Guys, here's over 500 pictures of you guys working the software. I don't doctor these pictures. I just steal them and drop them into the spreadsheet. There's ideas on the NASDAQ, guys. If you're on NinjaTrader, the NASDAQ, I'm going to tell you right now, probably moves too fast for you, especially if you're new. TradingView, it's a little different story. But if you decide you want to trade the NASDAQ, here's some of my thoughts on it. Management, patterns that repeat themselves, a place to build your plan, and both sheets will have a trade tracking sheet as well. So when you drop your picture in the room and we have the opportunity to discuss what you saw, what happens is you're going to get feedback. Hey, your strong trigger read was perfect. Your potential to break was outstanding, but your entry was 5 bars early. You need to wait for the areas inside of triggers. You can go back and you can drop, whoops, wrong spreadsheet, that feedback from class into the room. And if you take 3 minutes every morning, that's all it'll take, half a cup of coffee. Go and study what you did yesterday and ask yourself what worked and what didn't work and what felt easy and what felt forced. And what happens is you're setting yourself up for the day. This little study each and every morning says, okay, life was amazing when I followed the rules. Life got difficult when I traded without momentum. Life wasn't as easy when I traded into termination conditions. Guys, it'll prepare you for the day. It'll accelerate the learning. And the people who take the most pictures, guys, the people who spend the most time capturing pictures, annotating charts, posting in the room for feedback, these are the people that are finding success the fastest. So that's going to be our path today. We are going to learn some rules. We're going to do NinjaTrader first. We're going to simulate. You're going to simulate. I will simulate in class if the rules are met, guys. If I get strong triggers, no terminations, and an area for entry, we'll pull the trigger in class and we'll manage it, and we'll manage it according to what we call the KISS plan. This was also dropped in the room. This is your plan, brand new users. It tells you where to find your rules. It gives you a checklist for entry, and it even gives you a very, very methodical management plan for the highest probability trend trade until you can write your own. It also includes a second trade, which is a potential to break trade. Does not have that clear path. The entry rules are a little bit different. The management is a little bit different. So I encourage you, learn the best of the best. This plan is designed to optimize your chances of success as a brand new user. It's designed to teach you to read your chart, to recognize 3 advantages. And when you guys begin to look at your charts and say, I have this, I'm missing that, that understanding sets you up for success, guys, because when all 3 are there for a trade, momentum, path, and entry, it's a high probability trade. It's a trade that you can prove wins more than it loses. When 1 goes away, it puts you in medium probability. If 2 go away, I don't know why you're taking these trades. You have to describe it as low probability. You will be in control of the entry. You are the only one. Audio is skipping. Let me try a quick reboot. Thank you, Todd. I'm going to reboot real quick and see if that fixes it. Just 1 second, guys. Thank you for telling me. And what I might do is I'll get the reboots. And as I come back, a lot of times you guys can hear me. So hopefully this clears it up. The other thing I can do, if need be, I can switch microphones over to my webcam, and we can see if that clears it up as well. But usually the reboot works out. Is that better, guys? Can you hear me better? Mo better? There we go, and the picture's back up. When you start to talk about advantages, guys, you know what you're up against. Receiving all words, no skipping yet. Awesome. You're in control of the entry. Nobody could ever make you enter the market if you don't feel like you have an edge. No one could ever make you get into the market hoping something happens. So you're in control 100%. You're not in control of the market, but you are in control of whether or not your rules are met. But when you know what's working for you and against you, when it's all three, life is good. And when one goes away, it's still good. This is going to be the majority of your trades. You just have to manage a little more assertively, a little more aggressively, taking quicker profits. So we're going to focus on these three rules. And before we do it, I want to talk about the tools you'll be using. So RK and who else is new in here? We had a couple. Dyer was in here. Derek. On NinjaTrader, you're going to see triggers on both the big chart and the little chart, guys. These are moving averages, trade smart. You have small triggers, 2 solid lines, and you have large triggers, 2 dashed lines. And believe it or not, that's all you need to know about trigger lines is that these are small and these are large. We will use trigger lines to define the momentum in the market. We will use trigger lines to define termination conditions when you've reached an area that could stop the market. And you're going to use these large trigger lines for entry on your smaller, faster chart. All they are is moving averages, guys. And if you know small and large, you have the keys to the kingdom. We're also going to use areas. So on your large chart, these areas, that's where these men and women are making decisions. On the small chart, we're going to use areas for entry to get in where that small crowd's most likely to fail. They all have names. You don't have to know how they came to be, but there are going to be magenta lines that print off of a high pivot. This is called a divergence high. You'll see a negative number, which has no impact. It's just a number. It's a byproduct of calculation. Or you'll see a cyan line with a negative number from a low pivot. Anytime you see a divergence line, I want you to say to yourself, there was a loss of momentum. That's all it is. It signifies that there was a loss of momentum in the push up or there was a loss of momentum in the push down. You're going to see Fibonacci resistance, which is a red line that runs the distance across your chart. When the market is trending up, this is an area that could stop the market, that could create an untradeable bounce. When the trend is going down, you'll see the blue line. This is Fibonacci support. Fibonacci support can stop a market, can create an untradeable bounce. You'll see it long before you get to it. You'll see these yellow 1-to-1s, and these are fibs that print in the moment. These are 100% Fibonacci alternates. You don't have to know that, but what you do need to know is that in a market that is pushing up, it may behave as resistance. In a market that's pushing down, it may behave as support. And then finally, you'll see a midband, and it's a moving average, and it runs through the middle of your screen. When price is below the midband, it'll be magenta. It may behave as resistance. When price is above the midband, it will be green. It may behave as support. These areas are going to be on both large and small charts. Just learn the names and then how they associate with the rules. And the first rule that we're going to talk about, and let me ask, is everybody good with that? We're going to use trigger lines and we're going to use areas. And guys, triggers are going to tell the story on everything. Triggers should be your best friend. Pay attention to the triggers because the first rule says that they have to be strong. Hey Brian, if you need a workspace with the market flow overlay, I got those from John Novak yesterday. I can give you one if you need it. I know we weren't able to put it up there. I believe that was you. Let me know. I can drop it in the room for you. Guys, large chart, big chart, slow chart, large crowd must have strong trigger lines. And strong trigger lines are pretty easy to define. So first you have to know which direction the market is moving. And if it's green background, the market is moving up. And if the market is moving up, your path of least resistance is going to be to trade in the direction of the trend. So when the background is green, in order to have strong trigger lines, your small triggers and your large triggers must be green. And strong triggers means that the small triggers are up and above the large triggers. Large triggers must be wide, and there is space between the two. In a downtrend, background is red, larger red, smaller red. Smalls must be below the large must be wide, and there has to be space between the small and large. Now here comes what I think is the easiest way to recognize momentum. I want you to picture scissors. And when scissors are open, thank you, Jerry S., they can cut you a check. The odds are favorable when the scissors are open for the market. Whoops, I hit my keyboard. To continue in the direction of the trend. Odds favorable momentum is going to be the battle cry in this room, guys. OFM, you're going to see it on charts annotated all day long. Strong triggers pushes a market. Strong triggers is what we look for to break areas. Strong triggers will even cover up the mistakes that I tend to make as a new user. But momentum doesn't last forever. The big crowd gets tired. The other crowd fights. And when those scissors close, when the small triggers work their way inside of the large triggers, this is what we call weakness. And when we have weakness, anything can happen up or down. I'm a little bit of a language nerd, guys. Odds favorable, strong. This paints a picture that excites me about looking for my next rule to be met. Weak, anything can happen. I'm okay sitting on my hands and doing nothing until the market can provide me with the strength that I need. These weak triggers are where you'll see Fibonacci areas typically hold. Weak triggers are where you'll see retracements from the middle of nowhere. So here is your large chart, and let's just do this. Separation between the small and large. Do you see how the market pushes down? And then it begins to get weak, and it's with weak triggers that the market retraced all the way back to Fibonacci resistance. And you'll see this a lot. You'll see weak triggers, indecision, and the market bounces. And boy, this has been a lot of stops, huh? Weak triggers, there's a big pullback. Weak triggers, that's where the move up started from. So it's either strength or it's weakness. RK, does that make sense? Derek, does that make sense? Guys, this is probably one of the best lessons that you're ever going to get because momentum is hard to stop. Momentum is difficult to stop on a large chart. Thank you, Jerry. But areas, divergence highs, divergence lows, resistance, support, one-to-ones, areas can stop a market, guys. Areas are where the large crowd are making decisions. And Derek and RK, I'm going to call on you every now and then. I appreciate you answering. I know it's a lot on day one. Don't be afraid to ask questions if you need a little clarity. So once we have momentum, and it's important, only when I have momentum will I go to rule number 2. Rule number 2 says no termination conditions present. Nothing in the way to stop forward progress. So we are actually going to go back to the triggers once price reaches an area. So if the market is trending up, the momentum is strong, the price bars are moving, and they hit these yellow one-to-ones. Once price reaches an area, I want you to count triggers. And if none of the triggers, big goose egg, have made it above this area of resistance, I want you to assume the area is going to hold, that the area is going to create a bounce, that any trade you take directly into that area is going to result in a loser. Because what happens is about 70% of the time, that's exactly what happens. If price reaches these yellow one-to-ones, triggers remain below, it's more likely to create a bounce against your trade than it is to just arbitrarily break and produce a winner. So this is your big patience piece. When two triggers, both lines of the small, get north of the area of resistance, you can say, all right, with all that momentum, with 2 triggers through, it does have the potential to break, but guys, I don't want you to get excited about a 2 trigger break. It could break. It's less likely to break. We start getting into areas with that real potential to break when 3 of the 4 trigger lines get above the area in question. So when both small triggers and a large trigger get above the area, now we're going to say, all right, this area has the potential to break with all that momentum. And that is the second trade on the plan that I'm giving you. And then finally, once all 4 lines of a trigger get above the area is considered broken. And the path is now clear, and your path will remain clear until you reach the next area. And this is where the good stuff happens. And I want to show you just how effective Fibonacci can be. We'll just take this picture right here for grins. And I just want you to see this and why rule number 2 is a rule. Price pulled back to support, all the triggers remained above, and we get a huge bounce. There it is at resistance, coming back into support, back into resistance, yellow 1-to-1s, yellow 1-to-1s, big pullback, and now back to support. And guys, more often than not, these areas are going to ruin your forward progress. They will break from time to time. But if you get into counting triggers every time price reaches an area, price reached Fibonacci resistance, will you guys give me a Y if you see that all the triggers remain below? And sure enough, right from that key area that used to be support, the market retraces all the way back to those large triggers. Guys, price loves to return to a moving average. And if those large triggers are ever a full bar away, you have to believe that price is most likely going to return to them. And guys, these are like the greatest safety net ever. Because when you have momentum, the market's going to be hard to stop. When there's absolutely nothing in the way, there's nothing on a large chart to create a bounce. The easiest trades that you will ever take will be trading away from Fibonacci resistance with nothing in the way and momentum, trading towards Fibonacci support to take profits, or trading away from Fibonacci support with momentum and nothing in the way, looking to take profits right at that key area that you knew about 2 hours before you ever got there. These are going to be the easy trades, guys. So now we have to define entry. Can you give me a Y in the room if you're with me? There's your momentum, separation between the small and large. And guys, there's nothing in the way. Price didn't reach an area. This is the best of the best. This is some rock star status looks. And now we're going to go. Yeah, Jose, we're going to talk all about TradingView, man. No worries. I just want to get through NinjaTrader first. I've got a lot of people that are running demos on the software. And since they're starting here, I want to make sure that we get them with that foundation in first. Once I have momentum, once the path is clear, guys, you're going to see these tails produce on a large chart. We don't try to catch these tails. That would be too much work. Those tails, believe it or not, are the retracement on the smaller, faster chart. So we're going to go to that refinement chart to pinpoint right where that tail is most likely to form. This is rule number 3. Rule number 3 is the advantage of an entry area. Rule number 3 is so specific that you will use a limit order. You're literally going to wait for the market to come to you. And it's going to come to you selling or buying that pullback, that fight from the small crowd. And you're going to do it at an area, at a fib, at a mid band, at a yellow 1-to-1. Fib is short for Fibonacci support or resistance if you're brand new with me. Because areas on the small chart can create a bounce in the direction of the trend, the same way areas on the large chart could stop forward progress of a trend. But here's the kicker, guys. Here's the most important part of the recipe, and I want you to learn the recipe and I want you to learn the language. You are going to buy or sell a pullback at an area inside of triggers, guys, because triggers will define where the pullback is most likely to go. On your entry chart, you have large triggers. These are smooth, no steps on them. You'll use these compared to the small and you can gauge the momentum of the move. But you're also going to have synthetic triggers, and these have steps on them. And the synthetic triggers are nothing more than the triggers from the large chart. And what happens is price returns to large triggers very often on the large chart, and price returns to large triggers on the small chart. So trigger lines define the retracement. Areas within that retracement zone, fibs, midbands, and yellow 1-to-1s, that's where the market is most likely to bounce. That's where the trend is most likely to continue. That is where the large chart advantages tend to take over. So to define entry, we're going to go through and we're gonna do it on just a small chart look first. When the large chart has momentum, when the large chart has a clear path, when the large chart has given us everything we need to look for an entry, you guys are going to turn your attention to a smaller, faster chart. That's your entry chart. And your job is to wait for this reversal bar, because this reversal bar signals the beginning of the fight. This reversal bar signals the beginning of the pullback. Well, where's the pullback most likely to go? Guys, you'll know before the down bar ever prints. It is likely to go all the way to the bottom of those triggers. Somewhere from the top of the triggers to the bottom of the triggers defines the retracement zone. And then you're going to say, triggers aren't bouncy. I need an area. I need a fib. I need a midband. I need a yellow 1-to-1. And they need to be in the retracement zone, inside of the triggers. That language is very, very important. I capitalize it. So from this midband, the highest point of support, to these yellow 1-to-1s, the lowest level of support, this blue shaded box is what I call the window of opportunity. And the window of opportunity is where the market is most likely to continue. Your job will be to activate a limit order a tick or two above the highest point of support, because your large chart is screaming north with absolutely nothing in the way. We're not going to trip over a couple pennies to save a few dollars, guys. And this becomes your entry for the highest probability trend trade. And what you're going to realize is that if your advantage comes from the areas inside of triggers, your advantage is lost when you get below these triggers. Any line below the triggers is no longer a part of the equation. Any line below the triggers is where rule number 3 is no longer in play. RK, what time frame is used in a large chart and which time frames are used in a small chart? I'm going to tell you. I'm going to do this in 2 parts. Your large chart is a 13-2 dynamic Renko, which means that you have 28 ticks in a bar that goes as high as it can go and as low as it can go before it creates a new bar. Your 5-1 is your smaller, faster chart, which means there are 12 ticks in a bar from the highest to the lowest point. And now, RK, are you ready for the wonderful thing about what we do? You don't need to know that to be successful, my friend. All you really need to know is that this is the big chart. This will define trend. This will define momentum. This will define areas. And big is everything you need to use it. And then this is a small chart, and this will define entry, and this will help with management. And 13-2 and 5-1 is great for the people that need answers. But if you just go with big and small, you have what you need to be successful with the software. So on the small chart, the 5-1, reversal bar, define the retracement zone with triggers, define the bounce zone with areas, get in at the area closest to the reversal bar, guys. This is your entry for the high probability trend trade long. If you're new to futures, guess what? You can make money when the market goes down. So reversal bar begins the pullback. Once I get the reversal bar, I can define where the market is most likely to retrace. I can define where it's most likely to bounce, and my limit order goes just below the area closest to the reversal bar. Any line beyond the triggers is not a part of the equation. That's not where entries come from. And the great thing is that when you define where the market is most likely to continue, what you've done without realizing it is you have defined where the market should not go. And guys, this will be your initial stops. When you enter the market just below resistance, inside of triggers, you know that the advantage of rule number 3 is no longer in place about 4 to 5 ticks beyond those trigger lines. This will be your initial stop for a short trade. And if you know that the areas inside of triggers are most likely to create the bounce in the direction of the trade, your initial stop will go 4 to 5 ticks below the triggers. And that specific plan is outlined in the KISS plan that I gave you. So you've been able to define where the market is most likely to continue, where the market is most likely to go, where the market is most likely to bounce. And I want you guys to see this right here. This is a great way to study it. With momentum, can you guys give me, let's just go through an entry, right? Let's do an entry together. Let me know what you think. On the large chart, and let me get rid of, let's make this super easy for everybody to see. Whoops. On the large chart, can you give me a Y if you see that I have momentum? Smalls, below the large, space between. Rule number 1 is met. This is your best look. The scissors are open, the market is pushing. Now, once I have momentum, I have to ask myself, what does my path look like? And guys, 2 of my triggers have made it through that area. 2 of my triggers have not. So I have momentum as well as the potential to break. You guys with me so far? Because of the momentum, because of the potential to break, I don't have a clear path yet. So if I take an entry, I'm going to take a medium probability entry. I'm going to turn my attention, because the large chart says go find an entry, to my smaller, faster chart. Does everybody see that the small chart is screaming down without me and my guts are twisting because I'm not in this trade? Oh no, I'm never going to get paid. And this is where I start to remember the language. The language says I'm going to buy or I'm going to sell a pullback at an area inside of my triggers. So as my price bars are moving down, I'm looking at my triggers. I'm looking at large, synthetic, and I'm saying to myself, and I want you to see how things change. I already know where the areas inside of triggers are before the reversal bar ever prints. But I need a reversal bar. And the market keeps pushing, and my triggers keep going. And guys, sure enough, my range grows a little bit. And the market keeps pushing. And there's my reversal bar, guys. And I already knew. Have a great day. I already knew where my areas inside of triggers are. Are you guys with me so far? Strong triggers, potential to break. Everything says down. There's that magic reversal bar. And we knew exactly where the areas inside of triggers were before it ever printed. So this box, and it's even smaller than that, is precisely where this market is most likely to bounce if this is going to be one of those winners. This market is exactly where I want to get in. And I'm going to right click on my chart and I'm going to activate a limit order, a tick or 2 below that reversal bar. Now watch this. Here they come. They're still coming. Oh my goodness. And congratulations. You are in a short trade. You're in a trade with the advantage of momentum. You're in a trade with the potential to break that divergence low. You're in a trade precisely from the area inside of favorable large triggers. And because you know that your advantage of rule number 3 is no longer present, your stop 7 is about 4 or 5 ticks above that above those trigger lines. Is everybody with me? All we've done is we have defined, well, that's the wrong color, huh? Let me make that a color. And guys, know that this is our stop. We'll make it chocolate because it's delicious. So we're in And now we're done. The only thing we're in control of is whether our rules are met. And watch this. It goes up another bar. And now I'm nervous. But I'm still in the retracement zone and I'm still by those areas. And it goes up another bar. And man, my palms are sweaty. And there's butterflies in my stomach. And it goes up another and another and another and another. But I'm still in the retracement zone, guys. My advantage of rule number 3 is still in play. And it goes up again and again and whoa. And now finally, the market is going down with momentum, with the potential to break. And it did overrun that retracement, those areas, but it never left the retracement zone. Do you guys see it? This is why initial stops are placed outside of the triggers. And now in your KISS plan, it says, guess what? Once you get a bar in the direction of your trade, let's put our new stop 2 ticks above that bar. So now your new stop is above the bar that's now going down with momentum, the potential to break, and from the areas inside of triggers. In the KISS plan, targets are $100 out. So there's your first target. And the second target is $200 out. So that'll put us at 66. Nope, sorry, 76. Doesn't look like a lot of room, does it? It's 2 targets, predetermined, and the KISS plan says now, if I hit the first target, I'll go break even. If I don't hit the first target, I'm going to get stopped out for a loser. It's okay. It's a cost of doing business. The market continues down with momentum. Ron, you can preset it at 10 ticks. Well, David, I'm historical here. I'm not looking at a live market. That could have a lot to do with it. The market continues down, and it hits your first target. And that's $100 in the bank. And now your stop is break even, and you have absolutely no risk, get off of there, on a trade that you just made $100 on. And if it goes to our second line, ladies and gentlemen, and I believe it did, boom, that's your $300 trade. That's your $300 trade based on momentum, based on the potential to break, based on the pullback to areas inside of triggers. Can you guys give me a why, if that makes sense? Because that's what I talk about every day in this room. If you're new with me, I don't deviate. We talk about momentum and path over and over and over. David, what market do you typically trade? Crude oil? I'm going to give you guys real quick for both the S&P and crude oil. Here is, let me copy it and bring it over. Here is a KISS plan ATM strategy for both markets, guys. Steal that. Go to and extract that file to Documents, NinjaTrader 8, Templates, ATM Strategy. And then you will have those predetermined stops or those predetermined targets loaded into your KISS plan right here. So all you'll have to do is go to your drop down and hit either KISS or KISS ES if you're on the S&P, and it'll put those $100 and $200 targets in place for you. And guys, that's what we talk about every day. And I want you to see, even with a reversal bar up on this chart, guys, the market still went down with the advantages. And if I circle or square the top of that tail, it's the top of the move. Pretty cool, right? What a great way to study. So when we go to the live market, my smalls are breaking down. Well, then you're good, David. Who was asking? Was that Ron? I'm sorry. Ron, we're asking about 100 and 200. My apologies, David. Ron, there's your ATM strategies to get those targets in there. My bad. I got confused. Guys, my smalls are breaking below. Does everybody see it? So we're starting to get momentum. I have 3 triggers below trouble. Guys, this is where language is going to pay all the dividends you could ever hope for. The rule for entry. Learn this phrase. Sell a pullback at an area, and then most importantly, inside triggers. We just saw how effective the triggers were at defining the pullback area. So guys, rule number 3, there's my reversal bar. There's my triggers. Does everybody notice that there is no area inside of triggers? New guys, this is so important. There are no areas, no fibs, no mid bands, no yellow 1-to-1s. And once I get to the wrong side of the triggers, ladies and gentlemen, I have no idea if, when, or where this market is going to stop. The advantage of rule number 3 is no longer in play. And there it is again. No areas inside of triggers, and look how far the retracement went. So guys, every morning, and this is the great thing about this room, every morning we discuss momentum, clear path, and entry. So if you didn't pick it up today, guess what? We're going to talk about it all day. We're going to talk about it again tomorrow. We're going to talk about it again every day for the rest of my natural born life. Work on your reads. Ask questions about your reads. Study the reads. Annotate the reads. Post them in the room. Get feedback. And guys, that's Ninja Trader 101. So let's go through. We just did this one. It's beginning to separate. It's not a clear path. No areas inside of triggers. Let's go to the S&P. Weakness. Price reached a divergence low. Absolutely no triggers through. Give me a Y in the room if you just saw how fast the market rocketed right off of that termination condition. Would have taken you out of a short trade, wouldn't it? Rules are designed to keep you safe, ladies and gentlemen. Rules are designed to keep you out of trouble. You knew about that divergence low since 9:31 a.m. It is now 9:45. You had 15 minutes to anticipate it. A little bit outside, not 5 ticks. Some of you may have made some money. Little separation, triggers above. Bottom of the triggers were at 33, low is at 31. It might have gotten you. Gold is flying. Gold is crazy, Rick. Gold is crazy. Odds favorable, potential to break. There's your pattern again. So RK and Derek, all you're learning right now is a pattern. You're learning how to recognize momentum, counting triggers at trouble, and if everything is right, selling a pullback at an area inside of triggers. So you can go back historically and circle those tails, pull back to support right inside of triggers. And the pattern is the pattern, even directly into a termination condition. It still pulls back to areas inside of triggers, but you can choose to skip this one because it doesn't provide the advantages, understanding that the next one is coming. So guys, that's Ninja Trader. Are there any questions? Terminations for the win, guys. Momentum for the push. All right, so let's go to TradingView real quick. TradingView doesn't use these smooth dynamic Renko bars. TradingView uses minute bars. And minute bars are slow. They take longer to develop, guys. You still have a large chart and you still have a small chart. But the TradingView chart reads are a little different. Your 15-minute chart is still going to be your roadmap for targets. It's still going to show you where key areas of trouble can be. And we're still going to use the trigger lines to make sure that we're going with the large crowd. Your 1-minute chart is still an entry chart, but we're going to respect the strength, the momentum a little bit more on a 1-minute chart. There's 3 trades in the TradingView plan, guys. There is the mid band for trend trades. There's an HVA line coming from a termination on the large chart. This will help you catch that first move after a reversal. And then there's those HVA lines and zones that we're going to use with momentum, guys. And that's a momentum style trade. And once again, there's a checklist for entry. The most successful traders ever use a checklist. Do the same thing. Manage it the same way because your checklist creates an edge. But when we're looking at TradingView, because it's a 15-minute chart. So Jose G, here's how we're going to read the large chart. All my TradingView users, you guys, you converts coming over, do not treat TradingView, do not treat minute charts like Renko charts. If you guys are only NinjaTrader users, go get a cup of coffee. I'm going to be on TradingView for a minute. Do not try to count triggers at areas. Do not try to wait for the strongest triggers ever. Guys, it's a 15-minute chart. It takes forever. So this is going to be your read. What direction are the small triggers going? Do you see that the small triggers are down, everybody? Don't fight them. Go down with them. That's your path of least resistance. But then, because it's such a slow chart, you're going to see price in 3 different locations compared to these triggers. The number 1 here, that's the strong side. So when you're left of these triggers, that market is screaming. That's the best of the best, the highest probability short trades. When you're in number 2, inside of those small triggers, this is your transition. You're still only looking for short trades. You might manage just a little more assertively. And then when you get to the weak side, number 3, guys, the weak side is what happens right before a reversal. The weak side is what happens before those small triggers roll up. So it's imperative that you're really forcing that 1-minute chart to give you all the advantages you can hope for and not fighting at all. And then once I see that they're down and I know where I'm at, the only other question to ask, is there anything in the way? And guys, your areas, I made this picture this morning for you. The only indicator difference between TradingView and NinjaTrader are these zones. And these come from Chart Prime. These are not NinjaTrader. It is a monthly lease. But these zones, the same way yellow 1-to-1s, mid-bands, divergence highs and lows can stop the market, these zones can as well. So, for example, my small triggers are down. I'm on the strong side of the small triggers, and my final question is there anything in the way to ruin my good time? Do you guys see the zones? That's my roadblock. And what I want you guys to do every time, NinjaTrader or TradingView, when you see something in the way, whether it's a divergence high, whether it's a zone, divergence high, another zone, I want you to get this picture in your head. That's the most likely outcome, guys. You're going to have an oh shit moment, hoping that a key area breaks. And the cool thing is, someone said to me once, Mark, the market tops and bottoms, the areas that could stop the market are so effective. And do you know why the market respects these areas, guys? Because the market created these areas. The movement historically created these areas. We just use them in the moment. So once the large chart says go, when the 15-minute says down, when the 15-minute says up, when the 15-minute is strong, when there's nothing in the way, I'm going to give you guys this. This is the TradingView journal. So Jose, as you learn these trades, pictures paint the picture. That was kind of redundant. This is your journal. This is what it looks like to take an HVA trade. This is going to be the least common trade that you guys take because you have to have a strong topper. You have to have that termination. Trend trades are going to be very likely. Momentum trades seem to happen all the time. Here's pictures of all of them. Ideas on management. Terminations, no more longs, no more shorts. But I'm going to show you guys, TradingView users, there are 2 types of entries you're going to take. There's the trend trade look. And the trend trade look happens if your small triggers on the 1 minute turn against you. So everything is up. I'm looking for longs. And see how the small triggers, give me a Y, TradingView users. The small triggers are angled down when I'm looking for a long trade. My job is to do not a darn thing until I get a close on the correct side of those triggers. This is my immediate strength indicator. And if I went just long at the zone, it bounced against me and gave me heartburn. And if I just went long at the zone, it bounced against me and I lost a little hair. And if I went long, it freaked me out again, guys. But once I get a close on the right side, that's where it starts traveling with the large chart. So anytime the triggers turn against you, you're waiting for a close on the correct side. The other entry, and the one you're going to see an awful lot, is for the momentum look, guys. And remember that lesson that we talked about for momentum? How it is separation. Yep, this is 1 minute, Jerry. Entries come from the 1 minute. When you have separation between the small and large, when there's space between, when the smalls are below the large, and the market pulls back to a zone or an HVA, you're going to sell that zone. This is where you'll use a limit order. This is where you'll sell the area, and your stop will go just on the other side of that zone. This is when you are going to get in as price is pulling back because of the strong triggers, because of the large chart momentum, because there's nothing in the way on the big chart. If you don't have that look, you're waiting for the close on the correct side. Does that make sense, everybody? So if we go live market on TradingView, my small triggers are down. Do you see it? Price is trading on the strong side of the small triggers, but darn our luck, there's 32 flavors of stuff in the way, guys. No reason to take a trade directly into a zone. No reason to take a trade directly into a mid-band. No reason to take a trade directly into one-to-ones. And even with the small triggers, look at the reaction on the 1 minute chart. It's bouncing. The small triggers are rolling up. So my next trade, guys, if I'm going to continue with the down triggers, if I'm going to continue, it's got to come from the mid-band for a trend trade. And I would need a close on the correct side of the triggers because from 738.75, well, that's the wrong side of the zone. There's room back to trouble. Do you see how I'm not taking a momentum trade? First it's down, then it's strong side, then it's is there anything in the way? And the difference on minute, no limit orders, Jose. I want you to mash that sell button. I want you to mash that buy button. And one of the things on TradingView, do you see the countdown? 11, 10, 9. You know when it's going to close. So we'll see if it gets there. We'll see if these small triggers up, push it to the mid-band, push it to the HVA. And guys, once it does, you'll be trading directly back into a VWAP in the bottom of a zone. Not the best look, but this is how the timing would go. If I were looking for a close on the correct side of the triggers, I would watch that bar. Let me make it big, right? And I would watch that timer. And I would have to say to myself, I still have 32 seconds. And sometimes you won't get the entry, and sometimes the bar is too big, and sometimes the sellers jumped in sooner than you and push it down. And guys, they're right back to trouble. There's no trade here. Do you guys see? But it all starts on the large chart. My small triggers are up. Price is trading on the strong side of those small triggers. And I don't have anything in the way. As price pulls back to the mid-band, as price pulls back to the zone, my small triggers are down. If I'm going to take a trade in the direction of the triggers from the areas, I have to wait for a close on the correct side of the triggers. And here's the cool thing. If it never gives me one, I don't take the trade, guys. I don't enter the market. Does that make sense, Jose, George, all my TradingView people, Todd? Entry rules say because the small triggers are down, I need a close on the correct side of the triggers because I don't want to fight that immediate strength. I have never won a battle against those small triggers, guys. I have 22 seconds. Guys, minute bars create calm. Minute bars create just this relaxed feeling. But here's the deal. Todd, I love that. If you tried to put a limit order right here and confused Renko for TradingView, look what happened. It's still pushing down. And now we have another 54 seconds to wait and see what happens. And it keeps pushing down. So while we didn't get a trade, it's an avoidable loser. And guys, that's all it is. What's gold doing? Someone said it was flying. Small triggers are up. It's a little hard to see. Weak side of the small triggers, but they are up. I'm not looking for anything but longs. If I took a long, it had to come from the close on the correct side of those small triggers that were down, but there's nowhere to go. Directly into a midband, directly into a VWAP, and it's coming straight from a termination condition. And look how it held. Pretty cool, right? No more long trades. And you stay out of the trouble going into it. Guys, it's going to take you a little bit of time. Even crypto, directly into a zone, absolutely no more long trades, into a divergence high, outer bands, and XRP is bouncing down right from that key area that could have stopped its movement. You knew about it. And if you're an in and out kind of crypto trader, what a great place to take profits. So those are the basic rules, guys. I would encourage you to go through this KISS plan. What does it take to get me in? How am I going to manage it? Once you get through this and this becomes a little second nature, a little easier, it sets you up for those 50-50 trades. And the same is true over here, guys, on the TradingView plan. Understand where your advantages are met, know where the trades come from, and follow a checklist, guys. And then it's just a matter of rinse and repeat. Just rinse and repeat. The S&P, smalls below the large. I've got 2 triggers through this zone. I've got 3 triggers through this zone. And I'm directly into that fib. I'm kind of hoping here. Well, there's the divergence low. And it bounced. And we've got some movement in the market. Whoop, that is my auto system. Strong triggers. Guys, give me a Y in the room. New users, do you see how price reached Fibonacci resistance? And 1, 2, 3, 4 trigger lines remain below that area. That is a textbook termination condition, guys. That's an area that could stop the market. It's an area that may stop the market. It's an area that might stop the market. It's never guaranteed. But my advantage is off the table. My advantage is no longer in place, so I choose not to take the long trade. If I'm going to go long with this market, my small triggers are going to have to break above that area and give me some potential. If I'm going to go short with this market, I'm going to need momentum and the potential to break, and then I'll look for the pullback to the area inside of triggers. And I told you guys, every now and then, break-in rules will win, get you an opportunity for money. More often than not, you will lose money breaking your rules. That's why the rules are in place, guys. More often than not, this is a trade that can be proven to win up to 70 to 80% of the time. Every rule that we created, every rule that's given to you guys is based on thousands of pictures. It's based on us doing replay. It's based on us trading the market live through simulation. So when you see an almost trade break an area and you start to have that little remorse, that regret, damn it, that was my money. Guys, that wasn't your money, because it's not the one time that it breaks. It's the 36 times over the course of 11 hours that crude oil produced a loser if you broke your rules into that area. It's all the times that the market reversed from the middle of nowhere. Where is it? Let me find it. Because you didn't have the momentum that you needed to push it in the direction. All the times that the terminations held. So, how do you make it easy? Wait for momentum, have that path, find your entry, and rock it out. And guys, the futures markets trade billions. Look at that. It held again, didn't it? It held again. The futures markets trade billions every day. Billions. You don't have to be in every move. You don't have to catch every tick, guys. The idea behind trading is to pull more out of the market than it pulls out of you. Having an edge or an advantage is what does that for you. So I'm going to pause for a minute. I'm going to go stretch my legs and refill my water. When I come back, guys, when I come back to this room, I want it flooded with pictures. I want it flooded with charts. And if you're brand new with me, RK, Derek, do you guys have a way to take pictures and pop them in the room? Are you working with Snagit or Capture? Do you have Microsoft Snippet? I would appreciate if you would just take a picture and drop it in the room. Let me know that you can do it. And if you can't, let's work through it. Because it's the conversations that we have based on your pictures that are going to take you next level, guys. It's the feedback that you receive that's going to get you where you need to be. I promise you on this. Eric TK, the same invitation is there. And if you could, just write something on your chart. Say good morning, whatever. It doesn't even have to be a chart. Take a picture of a dog from the internet. Puppies make me happy. I'm going to leave you guys. Let's see what the termination condition does. I'll be back in about 4 or 5 minutes, guys. Stretch your legs. You guys are busy. Trade Smart, absolutely. I record every morning. So everything that I do, we put on our YouTube channel. So one of the cool things is, guys, is if you go to our YouTube channel and you look at the recordings, I'll go to the live playlist and give it to you. It's all repetition. It's the same thing all the time. So Trade Smart, absolutely. Go in and check it out. Today's will be there. I miss a day every now and then. But I always try to record it every day. RK, I just dropped in the room, my friend. Workspaces for crude oil and the S&P. Are you with me, RK? We'll do some quick little tech help. For you guys that are new, just a little heads up. I'm not much of a tech guy, but I'm good with the basics, so I can help you with a lot of the little things. What you'll need to do is extract that file that I put in the room that says Nexgen E-mini S&P 500 Futures Zip. You'll need to go to Documents, NinjaTrader 8, and Workspaces, and that's where you're going to extract that zip file. And then you're going to have to close NinjaTrader, open it back up, and those workspaces will be there for you. Did you catch it, RK? Or guys, just in case you didn't know, we have the most outstanding tech guy in the world, Jason. And if you go to the main page, technical support, you can put in a ticket with Jason and he can fix anything that's broken. And he is quick and efficient and will take good care of you. So RK, let me know that you got that message. David recommended Snagit. I agree. I love Snagit. I use it every day. Guys, let's get to some chart reading. What do you say? So going back, still hasn't broken the area of resistance. Strong triggers, no clear path, no reason to look for an entry. Weak triggers, right at a termination condition, no reason to look for an entry. Trading view. The NASDAQ says down, strong side. We are below trouble, but we are coming off of that zone. Might need to sit back and relax for just a moment. Crude oil. Guys, there's that termination condition on crude oil. Do you see it? It is up. It is strong side of the triggers, but you've got nowhere to go. There's a zone. There's one-to-ones. There's all sorts of nastiness. There's no momentum to push the move. Does everybody see that? You could hope it goes up. It suggests that it's more likely to go up. If you took a long trade at the close above, it's making you nervous, but that's okay because that was your close above, right at the midband, right at the zone, and it hasn't taken you out yet. Can't hear? Can you guys hear me? Give me a Y if you can hear me. Thank you, guys. Let me let RK know. He's new to the room. At RK. There we go. Hopefully that gets him squared away. So guys, the second half of what we do in the room is all around feedback. It is 100% based on the pictures that are posted in the room, the questions that are asked on the charts, the entries that are taken. And here is how I do this, guys. Every picture posted in the room, I'm going to go back. Let's close this down. I'm going to go back to momentum, to path, and entry in some form or fashion. So Paul gets us going, and I'm going to revert back to the trading plan that was given to you. So I'm going to read your annotations. We're going to look at your charts. No sound. Guys, you guys can hear me, right? Most of you can hear me? Yep. So same thing, Andy V. And guys, if you ever can't hear me, make sure you let me know. Andy will reboot. So we're going to get started on Todd here. I'm sorry, not Todd. On Paul. So triggers down. And looks like the strong side of the triggers. And it reaches support. And Paul, you took the HVA long trade. So when price reaches a 15-minute support and it pulls back to an HVA, that's your shot at being first in the move if it's going to go up. Does that make sense, Paul? The rules are met. The entry makes sense, maybe just a little higher than it needed to be. And I like to let it hit and then start back up. But that's the right trade. Stop may have been just a little bit tight. You gave it 2 ticks of room behind that bar, behind the HVA, Paul. Just a little tight. Didn't matter. It didn't work because it's hard to beat strong triggers. And for me, HVA trades, guys, when you're trying to catch the edge, that's a one and done for me. It either works or it does not. And then it does push down and it retests the zone. And I don't know that that was the spot to go long. Because, Paul, your read is down strong. Everything says down. There's no reason to even look for up. There is no HVA line. You're just hoping that this trade works when that one didn't. And then finally, small triggers on wrong side. You don't have large triggers. Oh, it's from over here. Down, strong, and you just jump into the market hoping that it goes. And I think we talked about this one, guys. There's 2 looks for entries. There is a close on the correct side of the triggers on the pullback from an area. So you could say that's what that was. And it just didn't work. And you don't have any momentum to believe that the trade is there. So good morning this morning, Paul. Your head's on right. Just a little bit of refinement here and there. Little bit of refinement. If you guys remember that there's 2 types of entries, and you go back to it every time. There's either a momentum look with strong triggers and a pullback to the area, or there is a trend trade look where you pull back to the area and then close on the correct side of the triggers. Those are your 2 looks for entries. And if you start working on it, let me make my entries look like one of those 2, you start finding better entries. Yeah, just a little tweak, Paul. You're getting better every day. I like this one. So Pete uses the idea that, RK, can you hear me now? I see you typing. Pete uses the idea that when everything is below support, all the triggers, support's likely to hold. So you're coming down, and Pete, you took a momentum style trade without momentum, and it failed miserably, as it should. And then it pulls back, and you are selling an area on the wrong side of everything, right? But here's Pete's big chart read. Triggers are down, below all the areas. Pete takes a risk outside, and it pays dividends because the large chart said it was more likely to go down than up. Nicely done, Pete. RK, can you hear? I want to make sure that he can. Do you see how momentum trades without momentum, though, Pete? It's hard, man. Your small chart was all wrong for that jump in entry. From a rules standpoint. No worries, though. I don't worry about you, Pete. You've been doing this long enough. You have a plan. And guys, that's the other thing that you're going to see. There are people in this room at all different levels. There are people that have been with us for 10 years. There are people that have been with us for 10 minutes. And everybody's going to take a different trade. Focus on your trade. If you're new, focus on your plan. Andy, whoops. Smalls are up. Weak side of the smalls. Above support. Pulls back to the support. Everything says up. You couldn't have bought the HVA because the HVA wasn't there yet. But with everything rolling up, it goes right up to resistance and gave a little back on the second lot. So Andy, I know you've made your money today. You might not be here anymore. Up, weak side, above support. When it pulls back to the area and you get a close on the correct side, that's your opportunity. Nicely done, Andy. Good job using those areas to take profits. While annotating, you missed a better move. Okay. And now you keep missing it. I'm not sure what you missed. It didn't pull back yet, Andy. Still no sound. Just getting music. Let me reboot on my end, guys. Let me reboot on my end. See if we can't get this going. All right, I'm coming back to you guys. Did that help? All right, I'm back. I'll get my screen up. Andy V, that got you. RK, that got you. Awesome. Cool, cool, cool. Let me show my screen. RK, I dropped in the room above you. Awesome, Derek. Good. Sorry about that, guys. Always let me know. We'll come up with a fix. Usually you can reboot. If that doesn't work, I'll always reboot. RK, up above just a little bit. I gave you a zip file. I'll do it again real quick. Here are crude oil and S&P workspaces. You'll have to extract that zip file to Documents, NinjaTrader 8, Workspaces. I know you said you had your 240 charts up there. When you do that, you'll have to close Ninja and open back up. But you'll have crude oil and you'll have S&P and it'll be the 13251, everything that you need. So hopefully that'll get you going. Andy, I'm not sure what you missed. The rules say buy a pullback. So we're waiting for the pullback there. Cool. And RK, if you need help, get with tech. Jason can get on your computer, set you up, get you 100%. Not everybody's computer savvy. It's taken me years to get computer illiterate, at least to that level. But take advantage of tech, guys. He's amazing and he's friendly. I've known Jason for, my goodness, at least 20 years. And he's just friendly. David, you said that your areas don't match up with mine on the 5-1. One of the things, David, and I don't know if you responded, I was historical and you were live. Okay, I just wanted to make sure. I didn't want to skip over that picture and have a problem there. You were live and I was historical, so you were in the now. All right, Rick. Got some circles here. So guys, check this out. Yeah, he is friendly and amazing. Before we ever get to Rick's small chart, does everybody see all the momentum on his chart? And 3 triggers through with the potential to break? Oh, no, you're good. You're fine, Rick. So, Rick, this is why Rick did this. Rick said, you know what? I'm going to hope for a momentum trade based on momentum and a clear path. David, I agree. And so, Rick, I want to help you just a little bit here. So I'm going to do 2 things. I'm going to take that picture and I want to get them side by side. So we're just going to put them together if you're cool with that. So Rick, what kind of trade is this? And I want you to name it because there's a lot of information in the name. Would you call this a trade that is based on momentum and really just momentum and path? Can we call it a momentum trade? Does that make sense? It's because of all this momentum and nothing in the way that you chose to jump in. Cool. Do you see where your small triggers are in relation to your large triggers? They're down, but they're not strong. It's not the same look as over here. So one of the things that you'll get when you don't have that momentum, Rick, and I love the trade because the large chart says go. This tiny little fluctuation, that little up is all the buyers had, and that reversal bar down is their failure. Does that make sense? Sometimes when you don't have the momentum that you need to take a trade, waiting for that little failure, that little blip, is all you need to get going. The real momentum trade was right there when price broke through and snapped back to the 1-to-1s. And I believe it was preceded by a beautiful trend trade. So first it was the trend trade, then it was a momentum trade, and then it's just the jump in trade, and you make a couple ticks, and that's awesome. And then it turned into what looks like another beautiful trend trade. You tried to set your entry. So on these, I don't know that there is an entry set. When you're just jumping in, you're just jumping in, right? You're saying everything is strong, everything is down, there's nothing in the way. I'm just going to jump in. You did it great. You did it great. I'm just little pattern. On the first, oh, you had it? Where did you have it set? Because it hit every area in the retracement zone. Did you put it up here where there was nothing to bounce off of? Nothing to bounce from, right? That's a good lesson. That's a good lesson. We expect these to create the bounce. This just defines the retracement zone. That's the stop placement. Good stuff, man. And I love this. Everything's screaming down, nothing and no terminations in sight. I'm going to jump the fudge in and make some money. And Rick, you did it because of momentum and path. You were able to make some cash on this one. I love it. But one thing, and I guess it was just that little heads up, if it doesn't have the momentum to push, sometimes you'll get those fluctuations. You were prepared for it and you handled it beautifully. Nicely done, Rick. And then Derek, now I know you can post pictures. Muhaha. Now we get to have conversations about everything you see, man. I love it. All right, let's see. So David, mom looking for an entry point with fast market, found it. All right. How about if we try something crazy? And David, you've been around long enough to know this. Does everybody see that he had momentum on the large chart? He had the potential to break. How come? David tried to cover up his advantages. 2 lines are through, 2 lines are not. It's only the potential. What does that mean? Why do I focus on that so much? Since it's only potential, I may have to manage a bit more assertive. That's it. When I know what I'm up against, guys, I know how aggressive I need to be. David gets rock star. Well, David, why did you get in on the wrong side of the triggers? When the rules say sell a pullback at an area inside of triggers, why would you get in on the wrong side of triggers? Beyond the retracement zone. Market was moving so fast. Right on. So I love it. Momentum, potential to break. Your entry was a couple ticks earlier, but they came and got you because they love you, David. But when you do that, guys, when you do that wrong side of the triggers entry, you run the risk of missing the whole amazing move. Couldn't get it below the mid. You know, if you right click below the midband, you can activate it. That activation happens below the midband. Good stuff. Great trade though. Awesome trade, David. Momentum, potential to break, well-defined area, medium probability trade, and nothing changed during the trade. Absolutely nothing changed. No reason to manage. You get paid on the first contract on the same bar that gets you in, and you get paid on the second contract at the divergence low. Outstanding, David. Newer users, one of the things you're going to notice is that these charts are going to start to all look the same. You're going to keep seeing momentum. You're going to keep seeing that clear path of the potential to break. And you're going to keep seeing pullbacks to areas inside of triggers. And it's going to snap. And you're going to go, whoa, there might be something to this. Let me study it. Let me put some time in. Andy, small triggers up. I don't know where you got in. You went short. I'm just going to look at your small chart, Andy, because I can't line these two up. Strong triggers. You got below trouble, so you sold it. And you made money. Nicely done. A lot of money in that bar, Andy. Good job. I have no idea what your large chart's telling you. It looks like everything is up, but your weak side of the up triggers, so using that momentum to your advantage was outstanding and a great move. Guys, I'm going to introduce you to the chili dog trade. For those of you new to the room, a lot of people latched onto this trade. And true story, I hated it because there was no pullback in the beginning. I'm going to share my study. So David, if you're in it in Simulator, there's my study on the chili dog trade. But guys, I want you to see how this works out and how Ron uses basic concepts to execute this trade. So new users, everything begins with momentum. Separation between the two. Do you remember when we said decisions are made at areas? Does it, RK, you remember that? Derek, you remember that? All of these lines are where decisions are made. So Ron created a trade because of his study on the high probability trend trade. He says if I have this much momentum, and the price bar, not the triggers, this is his own trade, clears where decisions are made, well then price isn't at a decision-making area anymore, which means that I have all this momentum, I'm north of trouble, and he will jump in and jump out for $110 or $112.50. And it's a base hit. And it's capitalizing on momentum and path and taking small profits, because all it is that one tiny little move, because fluctuations happen all day. It's a brilliant trade, and it's called the chili dog. So if you're in the room and you hear chili dog, that's what they're talking about. Getting above trouble with all the momentum and taking very, very quick profits. Have you guys ever seen Moneyball? This is a question for anybody in the room. Brad Pitt, Moneyball, he's the general manager of the Oakland A's. And he builds a team around the ideas that getting on base creates success. That's exactly what this trade is, guys. We should have called it Moneyball, Ron, but chili dog's more delicious. It's the idea that you don't have to hit a home run. That with momentum and path, you can find a way. All right, Ron T, first post. Small triggers down, large triggers wide. Saw this late, so you had to take a late entry. Clear path, and you just jump in, right? And you get in, and you get out, and you get out right at trouble. Ron T, I love it. The only thing that I can say about this trade, and I'm going to go back to, because it looks like you're trying to take that chili dog trade, by letting the back of the bar clear the decision-making zone, it tends to limit the retracement, because this is where decisions have the potential to be made. If you let the back of the bar get below it, the top of the bar, and then take your entry and work it on down, it typically helps with the results a little bit. Great job. And then when everything goes up and you have strong triggers and nothing in the way, you do the exact same thing. And you weren't sure about the path because of the mid-band. All right, Ron T, are you with me? I'm going to show you guys a pattern. And first, high five, Rockstar, great job. Guys, there's a pattern that repeats itself every day, and it's what we call the gap theory. And the gap theory is what is going to define your mid-band as a termination, and it looks just like this. The gap theory says that when price reaches the mid-band and the large triggers are more than a full bar away, which means they're below your reversal bar marker, this is the only time that your mid-band is a technical termination condition. This is when we say that mid-band is likely to produce a bounce that returns price to those large triggers. This is a pattern called the gap theory, and what it does is it says, okay, we can take longs all the way up, but once it hits it, let's sit on our hands and wait for it to close the gap. So in your picture, Ron, the mid-band is a non-issue. And let me show you guys, and this is pretty cool. This is a pattern that you can study. Price reaches the mid-band in fibs. You guys see how the large triggers were a full bar away? And what does it do? It closes the gap right back to those large triggers. And price reaches the mid-band and the large triggers were a full bar away, and it closes the gap right back to those large triggers. The market has a memory. There it is again. The market does the same damn thing every day, guys. Every day. That's why having a plan that you can prove wins more than it loses is such an advantage. It's that edge that sets us up. So good lesson on mid-bands as terms. Thank you for that lesson, Ron T. What does the market say right now? I don't have momentum, and all of my triggers aren't below resistance. And look at the scramble on the small chart, guys. Look at that refinement chart. It is grade A baloney. No reason to lose money in that. They still haven't gotten through that termination condition. Some of you are saying, but Mark, it went up, right? It did. Maybe you make a couple bucks. But guys, that fib is still holding. Don't worry. It'll break or roll. The likelihood of crude oil sitting in the same spot for 17 days is pretty slim. But that is all the shenanigans that are happening inside of these two bars. Just bing, 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 bing. Those are technical terms. Bing, 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 bing. That is the sound of price banging its head on termination conditions. Victor. Goat cheese. Nothing there yet. Momentum, yes. Clear path, not yet. No need to look for an entry, right? So Victor says, okay, not yet. And it kept Victor out of all the nonsense. Great job, Victor. Great job. Great chart read. Looks like your Ninja 8 got frozen because you loaded the crude oil workspace. How to reach out to Jason. No worries. There you go. Thanks for that, Todd. There's the link for tech support. If you click on that link, it'll have you create a ticket, RK, and then he'll reach out to you and get on your computer if need be. Guys, one of the things when your workspaces are loading, hands in the air. Don't touch your chart. Let it do its thing. But Jason will get you squared away. No worries at all, RK. It feels like a spring coming under more pressure. Which way is it going to explode, though, Brian? That's the question. Is the termination going to win the same way it did here and push the market down? Is it going to go up with momentum? And that's the best answer ever. I don't know. Jose G, take care, man. If you have questions, I know you're limited on time in here. Send me a message if you need a little help on feedback or something outside of the room. I know your schedule doesn't let you be here as much as you'd like to be. Awesome. Brian, you just said the most intelligent thing you could ever say. I don't know. I don't know if the market's going to go up, but I have a set of rules that keeps me from hoping. I don't know if the market's going to go down, but I have a set of rules that keeps me from jumping in and hoping. And man, that's really what sets everything apart, guys, is you will never know. You need more to read and analyze after your chart is set up. RK, I'm going to give you everything you could ever hope for. Are you ready? Don't tell the other people in the classroom. This is just for you. I'm playing favorites today. You will need more time. You will need more time. Watch this. If I type in drinking from a fire hose. Get up there. So that's on my search because this is what it feels like day one, RK. I don't care who you are. I don't care how smart you are, how much experience you have in the market. The language is new. The looks are a little different, and there's phrases to remember. And it really does. It feels like drinking from a fire hose. I know that it does. The beginning of knowledge is the phrase I do not know. I like that. But how do we get rid of the fire hose and at least turn it into a garden hose? Yeah, guys, stop putting the pressure. Can I ask RK and Derek what you do professionally? And you can make something up. It doesn't have to be the real answer. But I was an English lit major, IT professional. So RK, when you started learning IT, it probably felt like this, right? Derek, your ex-restaurant owner, I spent 30 years in the service industry. I was a general manager for a restaurant in Texas. So Derek, you'll appreciate this. Guys, when you're new to something, so RK, you'll get this, and Derek, you'll understand it. And you're training people, right? What do? You say, this is what we're going to do together, guys. This is what we're going to do. We're going to talk about how to get to where you want to be, how to analyze the problem that's in front of you, how to make sure that your managers don't lose money, right, Derek? I used to give every manager I trained a checklist. And guys, this is what I give you. And just because I hand you a checklist, there should be zero expectation that you can execute the checklist on day one, right? So we work side by side. and show and then do on your own. So guys, instead of putting the pressure on yourself to be a genius in a week, because RK, it probably took you a couple years to get good at IT, and Derek, your restaurant didn't bloom on day one. They never do. You've got to go through, you've got to test menus, you've got to do all that stuff. Don't put the pressure on yourself. It took me 4 years, well, actually 5, to get my English Lit degree because I had kids. So in the beginning, guys, don't put the pressure on yourself to find the trade. Go through the process and learn how to identify strong triggers, right? And guys, this is the easiest lesson that you'll ever get. I firmly believe it. Let's click on one of them. Small's below the large. All triggers in the background are red. That's strong triggers. Burn this into your mind and get really good at the idea that it's this look that leads the way. This will take you a day, promise. Once you understand strong triggers, you've got to start counting triggers at trouble. You've got to start saying, okay, the market reached one of those lines. I don't even know what it's called, but I know that it's a horizontal line. How many triggers made it through? Is it 0? Is it 2? Is it 3? Is it 4? As a brand new user, you don't have to worry about 3 or 2. Your job is to wait for 4. And yeah, it's going to keep you patient. But what happens is by day 4, maybe 3, you're already looking at momentum and you're counting triggers, and your large chart read is money in the bank. And then you'll start working on your entries. And guys, most people can find the patterns within about 5 days. Most people don't trust the patterns anywhere between 30 and 60 days, but you will know without a doubt that the software is effective. You will know that what we teach works. You will be able to study it. And I think even more importantly, you're going to see Nexgen users posting in the room all day long using those very basic concepts. Odds favorable momentum, nothing in the way, that's that clear path. Steve takes a pullback to an area inside of triggers. And you say after the second divergence, you should have exited at 64.09, 3 ticks higher. I don't disagree. And Steve, the coaching that I want to give on this one, a lot of you guys pull fibs off of your charts. You say, I don't want the draw in my system. I'm worried about the crashes. Steve, if you see a fib at 64.20, you have to know that there's a fib at 64.20 that belongs on your large chart. You took a trade with divergence directly into a termination condition. Getting off at trouble was great. I don't know that I would have held so long. And you did that after the fact. After second divergence printed, should have exited 64.09. Guys, that's that annotation that creates long-term results. Great trade, Steve. Awesome entries. Create manageable trades. But RK and Derek, do you see those strong triggers? That leads the way. That's the very basic lesson. It didn't hit Fibonacci resistance here. So Steve, if we use the language, bought a pullback at an area inside of triggers. And that's the very, very core of what we do. So don't put the pressure on yourself to be great in a day. It's not realistic. It's not fair to you. My wife would tell you to give yourself a little bit of grace. Odds favorable momentum. Hadn't reached Fibonacci support yet. You most certainly did on a smaller, faster chart. Directly into a termination again, Steve, with divergence. Great entry. Out at trouble. Nicely done. Good job. The bank vault. Nope. The numbers next to divergence are a byproduct of the calculation. That's it. So when the negative number prints and the line prints, just know that there was a loss of momentum. The negative number doesn't add any weight to the look. Good question. I actually get that question a lot. All right, Steve Diego with another one. Let's see what you did, my friend. And K Price, it's all right. We'll work through annotation all day long. Don't worry about it. If I nudge you in the right direction based on it, just understand that it's not because you're doing anything wrong. We're just learning how to talk to each other. All right, Steve. Odds favorable momentum. Mid-band not a term because the large triggers are not a full bar away. And Steve takes one of those jump-in trades. And it doesn't work. And it turns into the momentum trade. And Steve knows this. And he goes, I can hold on to this one. And then he gets paid at trouble. Nicely done, Steve. All the momentum. Nothing in the way. If the jump-in trade fails very often, it just turns right into a momentum trade. Absolutely beautiful trading today, Steve. Nicely done. And I know that you're aware of those fibs. Paul W. W. It's fun to say. I love that you love the system, Bank Vault. I do too. I'm extremely biased, but there's no doubt in my mind, once you guys get through the basics, it's unstoppable. It really is. To know where the market might reverse, to know where the tops could be, to know where the bottoms would be. It's what a gift. All right. Small triggers up. Strong side of the small triggers. Paul, you just jump in and it doesn't work and they get you. Jump in long. Reversed immediately. Guys, I love that you just jump into trades. I mean, that's cool, right? But Paul, if we go back to the basics, are you with me, Paul? There's two types of entries. There's the odds favorable momentum by the top of the zone, right? And by then the small triggers had rolled, so that's not a part of it, which puts you in the patience zone. Wait for the mid-band, wait for the zone, wait for the HVA, close on the correct side. And if memory serves, you got a pretty good looking entry to take you back to trouble from down there. Billions of dollars is what are traded daily in the markets, guys. You don't have to jump in. Paul, there's too much that goes on in a minute bar to really grab hold of that chili dog trade, I think. I know what you were going for. Two types of entries. All right. Background is green. Smalls are up. And larger gap between the small and large. Everything is pointing long. I like that. Maybe a trend trade? Let's see. So everything says up, and let's go through it together. I like your annotations, K. Price. I like your annotations. First, it's small triggers up, and then it's strong side of the triggers. And from your entry, the only thing that I can say, and I want to make sure that you recognize it. Do you see that big zone right there? That big zone could create a big ugly bounce. That's all I want you to recognize. Because your entry is trading into it, but let's expand a little bit, K. Price. You have all this room to get back to it. So even though you see it, I wanted to make sure that you did. With everything pointing up, you had plenty of room to make money, to trade with the market, to go with it. Great job, great chart read. Absolutely perfect. You don't just jump in. The small triggers roll. So you wait for the pullback. And here's the challenge. I can't see your entry. I can't see where you entered, because you entered all the way down here. Do you want to do me a favor? What is that? That's the S&P? Hold on. We'll just do this. We'll find it over here. It's the S&P. Let me look at your picture. I'm going to find it real quick. 6426. I can find it. 6426. All right, so here's your entry right here. So everything says up. All right, so K Price, here is the first entry. Everything says up, room to the target. Do you see the close above the small triggers at the mid-band in the areas? So that's your trend trade entry. Is that the one that you got? Textbook. Beautiful. Perfect. And it didn't do anything until all the way up here. That is a trend trade entry. And then look at what happened. You had strong triggers, everything set up, and it pulls right back to that HVA, and then it continues up to the next area. Pretty cool, right? So you took the perfect entry, and then it pulls back to the HVA with strong triggers, which is the next entry, if you missed it. And then once it gets to that 37 area, look what the market did. I love everything about it. And I think your annotations, you got in at the 1-to-1, but you didn't. You got in a lower at the mid band and stuff. Barely hit your target, but everything is still going up. But if you were in at 26, you were in right here at the close on the correct side. Great job. Does that all make sense? So what you took was the trend trade. And the trend trade entry, because the small triggers turned against you, it's the close on the correct side. And you guys want to see how much the market repeats itself? It did get you out at the 1100 mark. Oh, bless your heart. You only made $1,100 on the perfect trend trade on a 2-lot. K Price Gold Star. There you go. Buy you beer. Nicely done. So guys, I want you to see something real quick. And this is pretty cool. Remember when I said that the market repeats itself? That there's patterns that happen all the time? Pulls right back when the small triggers break. You could try, you could try, you could try, and then it's good. You could try, you could try, you could try, and then it's good. Guys, this is a great lesson for you guys using TradingView. Don't fight those small triggers. It's hard to win. K Price, awesome trade. All right, let's go do some live chart reads real quick. Small triggers are up. Strong side of the small triggers, but until I get above 37.75, guys, I've got nowhere to go. Does that make sense? Everything says up, but until I get north of this area, I have nowhere to go. And let me show you one of the things you can look at on a large chart. The market tried and failed to break that area. The market tried and failed to break that area. The market tried and failed to break that area. Do you see the tails on those minute bars? It did it one more time. So because it can't seem to do it, if I'm going to take a long trade, it better be the right trade, and it needs to be from north of that area. Needs to be above that area. I'm not going to trade directly into it. I'm not going to take a trade from below the top line of the zone. Look at it. Pretty cool, right? It's your large chart telling you what you need to know. Crude oil, there's that pullback right to the mid-band, right to the zone, the close on the correct side, and then it doesn't work and it pushes lower, and it gets back up to all the trouble. And now we're on the weak side of the small triggers that are flat and lifeless. Your 1 minute says down. This says it might go up. Guys, there's just nothing to do. I'm on the weak side of flat triggers. I wouldn't even say that these are pointing up. And look at that. They still have not broken that key area. Your large chart hasn't even produced another bar. And you guys knew about it. How long did we know about that red line? It used to be support. Hell, it was support, it was resistance, it was support, it was resistance, and it started printing at 10:08 a.m. yesterday, guys. And look at how it's reacted since. It behaved as resistance and created a big bounce, and then it broke and behaved as support, and then it broke and behaved as resistance, and then it broke and almost support, and then it broke and behaved as resistance, and now it's still resistance. Pretty cool, right? K price, would I look to reach the HVA? Let's just go through it. The smalls are up. Can we agree that the smalls are up? Transition. That means price is inside. It's not really strong or weak. And I've got room up to go with the small. Is that the same read that you got? They are pointing up. Oh, that's crude. My bad. Oh, I see what you're saying. So let me ask you. Bum, 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 bum. If I were going to take this trade, smalls up, strong side, and see that green line that I put in at the top of the zone? That's my line in the sand. That's what I want to be north of, K price. If I took an entry, I would have had to wait for the close on the correct side of the triggers. If I were following rules. That close put me directly into trouble. Do you see it? It put me directly into the bottom of the large. It put me directly into the HVA. It put me directly into the zone. So K price, sometimes the question that you're going to have to ask yourself is it worth it for 2 ticks into something that could create a bounce? And a lot of times, for me, the answer is no. So what's my next option? What I would want to see with this look, I would be willing to miss this one. This is me personally, my own personal trading. I would want to see it break above this area, develop strong triggers, and maybe pull back to it as a momentum style trade. Room to targets is a big part of what knowing where these areas are does for us. Knowing areas that could create trouble. If you decided that with this look, you're willing to risk it, then you are long, and you are still long. It just didn't have anywhere to go. And that's the challenge. That's fine. And that's your right, guys. I don't tell you guys how to trade. I don't tell you when to enter the market. I don't tell you when to exit. I don't tell you how to manage. I don't give trading advice. I try to make you aware of what your indicators are telling you so that you can make decisions based on what it's telling you. Took him a minute, didn't it, Brian? Resistance, held. Strong triggers, 3 triggers through. I've got areas inside of triggers. If they pull back, here's the challenge though. If the entry is at 62, your stop is at 44, which is nearly $200 worth of risk per contract on a market that only has the potential to break. So this goes back on the same thing that we were just saying to K price. Make sure that the risk is worth the reward. Make sure that the risk is giving you what you need for the reward. But you're right, Brian, 3 triggers through. Only took half an hour, right? Slow learning limit orders. Jumped in because of strong triggers. Okay. So Ron, you won't use limit orders on a jump in trade. right? Not a limit order, fear of market, fear of missing out sets in when I see strong triggers racing down. So you jumped in for small points. And that's fine. That's your right. When do we use limit orders? We use limit orders to buy or sell a pullback at an area inside of triggers. That's when limit orders are moved. If you guys are just jumping into trades because it's going strong and you're afraid it's going to leave you, you're mashing a buy button and hoping for the best. That's it. Nothing wrong with that. That's your right. But there's two different entries. There's different entries based on the trades that you're taking. So if you were gonna just jump in, Ron, your highest chance of success is give yourself room. What if those mid bands stop the market 2 ticks away, right? How big of a loser are you gonna take directly into an area? This one gave you plenty of room to get to trouble. Do you see the difference between the two? This one says, Ron T, you got room for some duckies there. This one says, whoa, I sure hope it breaks based on the momentum. Good stuff, guys. All right, strong triggers, breaking above, everything says up. So right now, am I in paper trading? I am. Remember when I said I hope it would give me odds favorable momentum and pull back to that zone? And if it does, my stop will go a couple ticks below it. So now it's up to the market. Here comes your momentum trade. George T. Everything says up. You get above the fib. You jump in and you make money. Nicely done, George T. I thought you were on TradingView. Great use of everything we've been talking about. Oh, they may or may not come get me here, guys. Nicely done. You're doing both. Awesome. Now K Price is going, Mark, you didn't get your pullback, but I took the close on the correct side of the triggers, and it sure did work out. Nicely done. Nicely done, K Price. All right, guys, I'm going to walk a lap. I'm going to stretch my legs. I'm going to breathe deep and take a sip of water. I will be back in just a couple minutes. When I come back, we're going to talk about, let's see what this one does. They hit those 1-to-1s, didn't they? And we're right back into a dumb termination condition. Arg. We'll see if that one stops it. I'll leave it with you. Back in a few minutes, guys. If you have a question, post it in the room. If you have a picture you need feedback on, post it in the room. If you have a picture of a question that you need feedback on, post it in the room. I'll be back in just a couple minutes. All right, guys, let's finish strong. What do you say? Um, Odds favorable momentum. Looks like 2 triggers above 77. And we're just waiting to see what happens here. Let's go to the next one. That's the S&P. They finally broke. And now they're just railing north without a care in the world. Nothing going on the auto system. So we'll just watch this one. Victor, momentum, yes. Triggers, 3 triggers through fib. What about those 1-to-1s, Victor? Did you see them? I just want to make sure that you saw them. Okay, so potential to break this one, not even the potential to break here. And you're saying, let's see if we can't grab something in the middle. You take the jump in trade and quick profits, nicely done. You catch the jump in on the breakout. Victor, I like that one. That's new for you. I like what you did there. And then when it pulls back, you get in a tick or two above the mid-band. Looks like you took quick profits. And it's above everything. Still have risk on the trade. Nicely done, Victor. And then divergence with really not much potential. That's the one that could push that market just a little bit lower. Great stuff, Victor. I like your little use of momentum and path to get up to those 1-to-1s. All right. Great question, Derek. Is it the sign of a reversal? I'm going to answer this in 2 parts. So a reversal looks like this. Uh-oh. Where your large triggers roll from red to green or from green to red. So this is a reversal in the market. And let's go back and just look at the live market. So there's your reversal, and there's a little reversal, and then that's where it went up. So what we're looking at, and this is probably just a language thing, Derek. Do you see how the market was up strong and it reached resistance? That's a termination condition. And that's kind of what we have going on right now. Price is still up strong. The overall trend is up. The momentum is strong. But what we're looking at is a termination condition. So every reversal in the market is going to be a reflection of the large chart triggers rolling. Now what you've identified is first on the large chart, we've reached an area and the triggers haven't broken. Does that make sense? So that's your termination condition. That's the same thing that made the market do this. But look how it did continue up. So we're not going to let our small chart convince us that the market is reversing. We're going to force the large chart to do that. Does that make sense? Awesome. So first on the large chart, and this will take a couple days to get, and I'll show you exactly how we do it. So we're going to let the large chart define trend. And I typed this out because for me, guys, when you type something out, it sticks. It takes the look and it sticks it to those words in your brain. So the large chart will first define trend with the background color. And it's just green is up, red is down. And then the second thing it'll do, it'll define the momentum, rule number 1. And then it'll define terminations, rule number 2. We'll just say define trouble, rule number 2. And all of that happens on this big chart before you ever even look at the small chart. So your brain will say, if I have momentum, I'll look for terminations. If I have terminations, I quit. I don't want to look for a trade, right? So I don't even go to this smaller, faster chart. I don't even look for an entry because I don't have a clear path. But if there was not a clear path, my language would change. I would say, with momentum and path, can everybody hear me okay? With momentum and path, I will look for, and here's that language, guys, a pullback to an area inside of triggers. So we don't even worry about reversals. It doesn't even come into the idea of the trend trade. It is first trend, then momentum, and then path or trouble. And if this chart was perfect, Derek, your entry would have been that pullback directly to a mid-band inside of the retracement zone. Does that make sense? But since we have this giant red flag right there at 1-to-1s without the triggers through, that becomes a much lower probability entry. It has momentum, it has entry, it just doesn't have path. So you would have to manage assertively. If you entered at 66, 74 represents your first trouble spot, where the market may make a decision to not go up with momentum. So it's always an order of operations. Yeah, and the small chart is the siren song. That's what I like to call it. It will sing you the most beautiful tune ever and lure you to crashing into the rocks. Because there's times, and let's just go back to crude. There's times where the small chart is going to look perfect, but the large chart, and this is probably a better example, you're going to say, oh man, there's my pullback, there's my mid band, there's my triggers, I need to go short. And you're focused on this, and you're missing out on the core concepts, that it's not a clear path, that it's not an area inside. So we'll see what happens. They're going to bounce a little bit the same way they did here, it looks like. But this is a great example of decisions are made at key areas. So when they reach resistance, that is literally the fight between buyers and sellers at the key area. And your rules said, let it break, let them work it out, let them figure it out. And now as we come up here, we're seeing that fight again, right at that key area. And guys, it might break and it might reverse, right? But what are the odds? What are the probabilities? The probabilities say that if price reaches an area and the triggers don't break, that it's more likely to push down from resistance. It's more likely to push up from support than it is to break. So what we're doing is we're saying, okay, because of probabilities, because of a pattern that's repeatable. I don't know what that means, Trade Smart. Are you swearing? Is that swears? Yeah, you can't type swear words in the room. You newer guys, Google Mark Douglas. Mark Douglas is a guru. And Ron, you look at the small chart too much. It's easy to get sucked in on the small chart, guys. It really is. It's not difficult to convince yourself that it's the perfect trade because you see those little fluctuations. That's where I like to bring this reminder in. Everything that's happening on the small chart right now is inside just one bar. That's it. It's one bar that says pump the brakes. And the small chart is showing you that decision making, that fight between buyers and sellers happening right at the key area. Does that make sense? This is the advantage of rule number 2, guys. Momentum on its own is outstanding. Momentum with a clear path is undeniable. Momentum with a clear path and a pullback to an area inside of triggers, guys, that's 32 flavors of kick ass. That's everything that we hope for. That's a pattern. That's all it is. It's a pattern that you can prove wins more than it loses. Big chart says down strong, says everything is flying. Small chart, fast chart, refinement chart said perfect pullback right to the areas in the retracement zone and continuation down with everything that the large chart suggested. Guys, if you were in at 94 and out at 59, your day is done. Guys, you're done. You made your money. You hit your goals. Go play golf. Go fishing. Chase your wife around the room. Do something. Trade smart. Let's see what you did. All right. You got a picture. Nicely done. That is definitely a picture, Trade Smart. Do you have any questions on it? Is there anything I can help you with on this chart? Do you guys want to do the read on the pullback? Trade Smart, you want to do that? Let's do it, just because it's a great lesson, right? Maybe? No? I love it when you guys post. Let's go back to momentum, path, and entry. And we'll talk about this bar right here. So the best look for momentum is separation between the small and large. Do I have it on this bar? What do you guys think? It's okay if you're wrong. Give me a guess. Give me a Y or an N. Do we have momentum? Ron says no. Todd says doesn't look like it. Andy says no. Derek says no. Congratulations, guys. You're already good at momentum. Now the question, let's count triggers. Do I have a clear path? On that bar, I've got one trigger below and 3 of them above. So what does 3 say to me? Is it clear? Is it potential? Or is it a termination condition? What do you guys think? 3 out of 4 triggers. Andy says potential. Potential, potential. Derek says clear. Derek, thank you for that. So Derek, in order to have a clear path, all 4 of the trigger lines have to get above that fib. Does that make sense? All 4 of the trigger lines get above. So what we're working with right now is the potential. Now, the potential is not clear, so I'm going to cover up clear path. All we're doing is we're seeing what we're working with here. So I already don't have momentum. I already don't have a clear path. Some of you will say, no way. Some of you will say, well, the market's trending pretty strong. Let me look for an entry. So rule number 3 says pull back to an area inside of triggers. So here is the reversal bar, and there's the second reversal bar, guys. Now here's a little nuance, okay? If your reversal bar closes below the thing you're hoping creates a bounce, that area is out of the equation. So you have to go lower. So here's my reversal bar. Here's my triggers. And here's the only area. I can't take a pullback to an area inside of triggers. Can you guys give me a Y if that makes sense? My area is below the triggers, on the wrong side of the triggers. The man, I don't know where it's going to stop side of the triggers. Let's get some of this nonsense out of here. You guys with me so far? So without momentum, with a path that isn't clear, and without having an area inside of triggers, guys, is it okay to miss this trade? Is it okay to not take that trade because I don't have the advantage? I believe it is. For me, this is a no trade scenario. I can't even come up with one advantage. But here's the problem. But the market went up, Mark. It did, didn't it? It went up without us. Guess what? That's just not your money. Futures markets trade billions, billions every day. You don't have to be in every move. But check this out. Once everything gets above and the path is clear, how many of you guys have shown me that trade where you jump in with momentum and get out for quick profits? So if you avoided this nonsense, eventually it gave you that jump in trade, if that's in your repertoire, right? Pretty cool. Guys, this is how you get better. It's that conversation. It's okay to not know. It's always okay to not have the answer. And Trade Smart, thank you for posting the chart. I don't know if you wanted feedback on it, but what a great way to go through it. If you always go back to momentum, path, and area, especially as a new user, you're gonna talk yourself out of taking trades where you can't find advantages. You're gonna know to get your management hat on. And Todd N, you said that. When we were just down one, you're like, watch closely so you can manage assertively. You are absolutely right. And then when more disappeared, guys, it's okay to not take the trade. It really is. And you have to believe the next trade is coming, guys. The next trade will show up. Your checklist will be met. 90% of your days is doing nothing. All right, Paul, I liked it, but was coming off an area that held. I do not know it was appropriate to do. It went, but was it within the rules to not take it? Didn't like your options here. I like it, Todd. Get him in, man. Get him in. So 75 is off in the distance. I can't see it. So from 53, Paul, with triggers up, from 53, Paul, do you see how you had room with the close on the correct side to get to trouble? The area didn't hold. Did it already hold once? It doesn't look like it made it up to 75 yet. It stopped short, pulled back, close on the correct side. HVA is your first line of trouble. Yeah. Okay, so let's do a large chart read real quick. And I think this is one of those differences, Paul. This is where your trade originated. You had the line in. I'm not sure that price got there, right? It didn't reach the VWAP. It didn't reach the 1-to-1s. It didn't reach the zone or the midband. That didn't happen until after that entry that you pointed out. Does that make sense? And I know that because that tail didn't hit it, that tail didn't hit it, and that tail didn't hit it. So you had all the room in the world to get to trouble. You had from your entry at 53 all the way up to the VWAP, at least. Does that make sense, Paul? It just didn't get there yet. $62. So yeah, 62 is right there at the top of that tail. And it pulls back. Once the small triggers roll against you, you put your patience hat on. You're waiting for the close on the correct side. That's exactly where it happened. Stop goes below. Takes you all the way up to 62 at the VWAP. And you could say, all right, I'll see what happens. Nothing happened. And it just kept going up all the way to trouble. That was the perfect trend trade. The perfect trend trade. And Andy, you wish your song was Won't Get Fooled Again, but even with the perfect looks, it can come back against us. Absolutely. Has anyone, raise your hand in the room if you win 100% of your trades? Does anybody in the room win 100% of their trades, even if they follow the rules all day long? Roll it on the floor. None of us. Guys, small losses are a normal part of a positive equity curve. I can't stress that enough. Small losses are just a part. There's no such thing, Todd. I don't know anybody that doesn't take losers. We can control our losses with concepts like the methodology that reduces risk, right? The advantages that set us up for success, understanding where stops go, repeating the same process. We could say, okay, if I take this look 10 times, I'm probably going to win 7 or 8 of them. I'm probably going to lose 2 or 3 of them. And one of the things that does for you guys, and I don't think people realize this, is it takes the stress out of trading. This is where I respectfully ask the room for like a hallelujah or whatever. Termination conditions for the win, guys. Is that amazing or what? If you are new to this room and you are not absolutely flabbergasted at the effectiveness of rule number 2, I don't know how to impress you. I don't know how to impress you. You knew about it, you had rules to avoid it, and there's no reason to give your money up there. Pretty awesome, right? Guys, I get excited about this stuff. I've been reading indicators long enough that my large chart reads go like this. Don't have momentum. Done. That's it. I'm going to sit on my hands. But remember when we said that could stop the market? And that this was the fight between buyers and sellers right at a decision-making process? Oh, and Derek, it's day 1. You're going to hear the same thing tomorrow that you hear today. You're going to see the same pictures tomorrow that you see today. You're going to have all these concepts that just keep repeating themselves. And by day 3, Derek, you're going to be like, oh, man. I can do this. I can use this software. I'm going to have to study it because, you know, this is a business. And I didn't open my restaurant in a week. I did a lot of research. And here's a question, and you'll like this because you were a business owner. Did you write a trading plan? Or did you write a business plan to open your restaurant? Guys, anybody that's owned a business, did you write a business plan? Of course you did. Don't treat trading any differently. Write your plan. Talk about your course of action. Talk about what you're going to do, how you're going to do it, where you're going to do it, how you're going to manage it. And then open your business, guys. And you're in that spot right now. That's it. And one of the greatest things that I ever read, Todd, is someone told me there are no mental plans, or I read it. There are no mental plans. If you don't have a written plan, guys, you're opening yourself up to opinion. Mark, it's a pullback to areas inside of the triggers. Guys, do I have momentum or a clear path on the large chart? What do you think? The smalls aren't below the large. The large are going the wrong direction. And 3 out of 4 lines are above the fib. My large chart says don't look for an entry. Ron T, the siren song, isn't it? The small chart saying, Ron T, give me all your money. Victor, you've been so patient. Just take the trade. Nanda, where have you been? Why are you not going short? Guys, you don't have rules met. And rules are your edge. Rules are your advantage. Rules are your brass knuckles in a bar fight, guys. Now, I have not once told anybody in this room to take a trade. I have not once told anybody to not take a trade. I've not once told you how to manage. I haven't told you that this is what you have to do, right? My job is to say, with the triggers up, in the transition side of the triggers, above trouble at 35, you at least have to be on the correct side of the triggers to have a fighting chance. But there's nowhere to go from the correct side of the triggers. What does crude oil say? Right off the termination. If you thought you were going to go long on crude oil, I want you to see something amazing. I love rules, guys, which is weird because I actually hate rules. Give me a Y if you see that the small triggers turned against. Any long trade, the small triggers are now down. No close on the correct side. 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 When it finally gives a close on the correct side, that's when the market starts back up. Doesn't mean that this was a long trade, but you had 4 opportunities to avoid a loser. If you were in the opinion that that termination condition didn't matter. That should be worth the price of admission, guys. Knowing when not to trade is equally as important as knowing when to trade. And knowing when to trade is just a process. It's just a pattern. It has nothing to do with the money. It has nothing to do with the glory, the songs children sing about you guys. So when you stop expecting to win every trade, this is from the late Mark Douglas, you will start winning most of your trades if you're focused on the execution rather than the result. The execution of having the perfect trade. The patience of waiting for odds favorable momentum. The patience of waiting for nothing in the way. The patience of waiting for a close on the correct side. And guys, from the termination, small triggers down, nothing in the way. There's your pullback to the mid band. It is closed below the small triggers that were against it. What do you think? Do you see it? Smalls down, strong side of the smalls, nothing solid to bounce off of, close below. It may or may not go. But golly gee, I do love the patience. Small triggers up, strong side of the small triggers, no place to go. Big red line in the way. Big divergence line stopped the market. Yellow 1-to-1s didn't let it pass. And look at the reaction on your smaller, faster chart. Straight down from trouble. If you're on day one, guys, it's an absolute cluster fudge. By day 2, you start to recognize triggers. You start to see lines. You might even name the lines. By day 3, you start seeing those pullbacks to areas inside of triggers, and it really starts to resonate. And I'm gonna tell you right now, if you really want to get to where you want to be, guys, I can't stress this enough. If you really want to be a rock star sooner than later, learn those basic rules, post in my room, and take 1,000,000 pictures, guys. Take all the pictures. My yearly count is 6,509. Nope, 6,535. Last year, I took 7,800 pictures. I have over 14,000 pictures, guys, and almost every one of them is annotated. Almost every one of them has something written on it, some sort of insight as to what was going on and what it meant to me. So, Eric TK, how are we doing? I know it's a lot in the beginning. Are you feeling better with a few days under your belt? Lost NPC, Shannon, talk to me. RK, day 1, just enjoy the ride. Trade Smart, how are we doing? Cash 8789, how long have you been with me? Is that a new name? Not sure if that's a new name. It sounds familiar, but I'm not sure. Miss Kathy, how's the world treating you? Morgan, always good to see you. Victor, any questions about why those 1-to-1s stopped the market and created a big ugly bounce? K Price, doing great. Miss Claire, anything I can clear up for you? Todd N, you got this. Just reps now, right? Brian, hope you're doing well. Throw a question in if you have it. Brian 17. Dennis, Hamid, Jen, Mike, Nanda, Rick, Ron. Don't be shy, guys. Class is a discussion. Pibbies, are you in here? No. In 2004, Nexgen started teaching a trade. I don't teach it in this room. It typically uses minute bars. But if a termination rolls those small triggers down, there was a trading plan that said sell the pullback to the small triggers, guys. It's an immediate momentum, and it did work. It's not a trend trade by any means. But that was one of the ways. That was pre-HVA trade for you guys. Trust the process, results will follow. Amen, Mike. All right, smalls below the large, larger wide. Have not reached trouble. 4 triggers below trouble. Do you guys see it? Before the reversal bar. Here's my potential retracement zone. Here's my areas inside of that potential retracement zone. Does that make sense? Do you see how quick that happened? Momentum, 4 triggers below, areas inside of the triggers for a potential bounce if it's going to continue down. That's how quickly your chart read happens with a little bit of study. Directly into a divergence high, all the triggers are below, could be the beginning of the end for the S&P. We'll see what happens. Trading view. Is my chart not loading correctly? Let's see what we have, K-Price. Well, I only see one chart. I see your 1 minute. There's my 1 minute. What's your concern? I don't know where you cut off your picture. You want to do me a favor? Grab your software, your capture software, and just get me a huge picture. It's hard to know if anything's wrong from a snippet. But you have divergence, you have one-to-ones, you have mid-bands, you have zones. Market flow seems to be working, no worries. I'm not sure what the concern is. Is there really, Todd? Look at that. Take a snapshot. Boom. I'll copy the image. Oh, look at that. Todd. For the win. Oh my gosh. Congratulations. You just changed my classroom. Look at that. That's beautiful. All right, guys, we learned something new today. There's a camera. If you're on TradingView, let's see if, hold on. You can even tweet the image. How cool is that? It's all good, K-Price? Awesome. The only thing is you can't annotate it. So Todd, if you figure out how to annotate that picture, let me know. That would be the only challenge. You would have to annotate it before you snap the picture. So you would have to use the text buttons and these. So you'd have to go, okay, it was here and text, and then you would have to snap the picture. That's awesome. Thanks for that, man. Guys, I'm always learning. I am always learning.